going to be starting a series of videos centered around housing affordability in the attempts to help people understand that it's not something you should be scared of. It's not a pipe dream, that owning a home and building wealth for yourself is very much real. Now, you see the headlines every day, Colorado housing is unaffordable, and you think to yourself, you'll never own a home here. It feels impossible, right? But what if I told you thousands of young people in Colorado are buying their first homes right now? They're not all tech millionaires. A lot of them are using a tool that has been around for decades. Today, we are demystifying the FHA loan and showing you the real, data-packed path to owning a home in Colorado. Now, what exactly is an FHA loan? It's a mortgage insured by the Federal Housing Administration. Think of it as the government vouching for you so lenders feel comfortable giving you a loan with more flexible terms. The first one is a low down payment. The magic number is 3.5% down. On a $400,000 condo, that's $14,000. A conventional loan might cost you anywhere from $20,000 to $80,000 for the same property. Another advantage is credit score flexibility. This is huge. You don't need a perfect 800 credit score. You can often qualify with a credit score as low as 580, and some lenders may even go down to a 500 if you can put 10% down. The catch and the reason why it works is mortgage insurance. Because the loan is a lower risk for you, it's a higher risk for the lender. MIP is an insurance policy you pay to protect the lender. This is crucial. This isn't a scam or a wasted fee. It's a key that unlocks the door for a low down payment. You can often get rid of it later by refinancing to a conventional loan once you have 20% equity. But this mortgage insurance is what allows the FHA loan to function. It's not something to be scared of. It's something to embrace and use as a tool to better yourself. Now, who's using FHA loans in Colorado? The myth is only people with six-figure salaries can buy a home in Denver. The fact, let's look at data from the Colorado Housing and Finance Authority, CHFA, which facilitates many of these loans. Millennials, which are aged 28 to 43, are actually the largest group of CHFA homebuyers in Colorado right now. Their average household income is $104,000, while the average home purchase price is $450,000. Gen Z, which is 27 and younger, are actually the fastest growing group of homebuyers. Their average household income is $89,000, and the home purchase price is $392,000. The takeaway from all this, normal people with normal jobs are making this work. They are buying condos, townhomes, and single-family homes right now. And you might be thinking to yourself, but can I afford the place I actually want? The FHA sets a maximum loan limit by the county. So each county has its own limit. Denver, for instance, is $816,000. Boulder County, $954,000. Colorado Springs and Greeley, respectively, are $596,000. That's the cap. That is the most expensive thing you could get with an FHA loan in those areas. The point is these limits are high enough to cover the cost of a typical starter home or condo in most major Colorado markets. Now, the real big fears. I have no way to save $20,000 for a down payment. And you know what? That's okay. Because we have a solution, and that is called down payment assistance. Colorado has amazing programs, and the CHFA offers down payment assistance that you can use with an FHA loan. This comes as a grant, which free money, or a silent second mortgage that you don't have to pay back until you sell or refinance the home. This can cover most, if not all, of your 3.5% down payment. Another fear is my student loans and car payment are too high and make my DTI, debt to income ratio, impossible to work with. Now, the FHA loans allow for a higher DTI than most conventional loans. Lenders have more flexibility to approve you even with existing debt because of mortgage insurance and the way the system's built around it. So it's okay that you have a pretty high DTI. They can still work with you and you can still do it. Now, a third fear is that I'll be house poor and have no money left over. The reality of it is lenders are required to make sure you can truly afford the payment. And a good lender is going to go through your budget, everything you spend money on, food, clothing, electricity, and they're going to help you make it work. Think of this. Rent is 100% interest. It is all to your landlord. It is nothing you get to see. A mortgage payment is part interest, part equity. You are paying yourself and building wealth over time. Here's an actionable 3-step plan for you. Talk to a Colorado-based mortgage lender, not a national website, a local expert. Ask them specifically about FHA loans and CHFA down payment assistance. This conversation costs you nothing and will give you a clear picture of your budget. Look up CHFA and Metro DPA online. See the programs for yourself. Understanding what's available is half the battle. The third thing you got to do is reframe your mindset. Stop saying if I can buy a home. Start saying how. The data shows that your peers are doing it and the tools are there for you to use. My wants, my desires are that you, the viewer, the person watching this, is able to get into the home they want. Is that you are able to build generational wealth for yourself and those who come after you. That you don't have to live month to month scraping together rent in a dingy apartment that you're never going to see a return on. I want you to live better. I want you all to have a wonderful day. And if you want to reach out to me, leave a comment or email me at corbin.colson@cbrealtor.com. Otherwise, I hope you all have a wonderful day, and I can't wait to see you next time.